Hi, welcome to today's video, and today I'm going to be breaking down how we could have caught plus minus 200 pips on GBP USD, and I'm sure you're all going to love it. So let's get right into it. So first and foremost, I'm just going to cut up a piece of chart over here, and we're going to start our analysis on the 4-hourly time frame. So on the 4-hourly, we are seeing clear higher highs and higher lows, a very clear bullish market. So obviously we're going to want to try and trade with the trend and catch some lovely longs to the upside. So looking at current price action, the first thing I'm going to do is throw in my key levels. I want to know the frame in which I'm working in between. Now, what key levels am I working in between? What's the range of this, of the two key levels that current price is in, so that I know where to take my positions and where to exit them. So obviously over here, this is your very clear previous resistance now turned as support. And on the top here, we have a current resistance. And if I extend this to the right, to the left, you will definitely see that there was a key level as it was respected many times in the past. Over here, as you can see, it was a previous support, resistance once, resistance twice, and we are currently tapping it right now for resistance as the third time. So we're definitely coming off quite nicely off that resistance. What I am going to be doing now is, now that you are tapping this level, the bullish level, shall I say, what can I do is I can pop to our 1-hourly time frame and have a look over here. As you can see, the 1-hourly market structure is currently bearish. This is now going against the 4-hourly market structure. So we are looking for long, but we cannot buy in a bearish market. We have to buy in a bullish market. So we have to wait for the hourly time frame to change from a bearish market into a bullish market before we can even hop down to the 30 or the 50-minute time frame to look for our entries, right? But what I saw over here was, since we are in an immediate downtrend, we can perhaps take a counter trend trade over here into our level on the 4-hourly. You might be thinking, but you're already at the level on the 4-hourly. Not just of yet. If you're up to your 4-hourly and you pull out the Fibonacci, you're going to see that we have not tapped the golden zone in the Fibonacci, which is obviously the 50% region, in between the 50% region and the 61.8. I even go as far as to say it's in between the 50% region and the 78.6 region. Remember, when you are drawing out your Fibonacci, essentially you want to have a correction that is at least 50% of the current impulse, leg, which was this one over here. You want to see at least a correction of 50% before you're looking for another long opportunity. Yes, there are times where it respects the 38.2, obviously in a very high momentum, high volume, bullish impulse or bearish impulse that can occur, but preferably you do want to see in between the 50% or the 61.8. So since we obviously, if I must just throw this in again one more time, that is your golden zone, and I'm going to make this a different color. I'll make it actually blue. So that you can see that this is obviously our level where we want to be looking for longs. And we can easily just throw a wick through this previous support, still respected, close inside of it, and then have a long opportunity from there. So if that is the case, then we basically can catch, say, 100 pips into our 50% region, and that's wonderful. That's it. Definitely something I'm looking towards. Otherwise, I'm going to be waiting a good amount of days to take a position on this asset. So looking on the hourly time frame, what I saw over here was I definitely saw we in a downtrend, right? So we definitely bearish. We broke structure here, pulled up, and we went down. We could have got an entry over here. It was quite clean, wasn't too bad. However, I wasn't looking at this also. Yeah, I definitely wasn't looking at that. What I saw over here was this down, and I saw our 50% region chilling over here, just over there. And I was like, you know what, eh? I will take a short trade into my 50% region, wait now for the change of market structure to bullish, and then I'll be looking for a nice fat long. And that's exactly what I did. That's how we all caught some good cash over here at MGR Forex Trading. And of course, will definitely be released very, very soon. And I'm hoping I'm going to get some lovely support from that. Let's all make some money together. All right. So your trade opportunity will look something like this, around 50 pips. You're looking to catch 100 pips. Is it always as such? No, not always. Not always going to risk 50 pips. Sometimes you risk 20, sometimes you risk 30, sometimes 60. It all depends on the position, the risk, and essentially on this position, you're supposed to put your stop loss above the high over here, but I knew that there's no point in doing that. We're in a bearish market. And I would have told you why in a moment, simply because had a level basically was forming over here. And if we closed above, and if, let's say, for example, a candle just broke above this level, let's see now, broke above this level over here, you would have been bullish, you know? So it's like now it's like we kind of in between here, you know, you're looking for a short to run into the 50% region on the 4 hourly fib, but now we're bullish on the hourly. So it's like you're trying to go counter trend, but you're actually going with the trend, and then you're still not going the right direction. So now you're actually like you totally messed up. You don't even know what you're doing. So I knew for a fact this was a little bit of a risky trade, but I knew that if you just threw a wick up, you would have been safe. And if we close below this level over here, you would have been safe. We could have continued moving all the way down to that level. But if we broke above and we closed inside my stop loss, I would have closed my position and looked for longs. Why? Because now we're bullish and now we're moving in accordance with what we want. Anywho, aside from that, this was quite a lovely trade. I didn't even need to go into my 50-minute time frame. Obviously, we smacked that level there, right nicely. And there we had that wick thrown up, and we still closed below, meaning we are now respecting this resistance that was created. And I was happy. I closed my position. I didn't close it there, sorry. I obviously put your stop loss in and put my take profit in. I was relaxing because I knew, look, we bearish. And what a lovely take profit smash we had over there. Now that we've tapped, and I'm going to remove all these areas here. Now that we've tapped our 4 hourly 50% Fibonacci, now we can be interested. Now we can start looking, okay, now we can look for our longs that we are anticipating from Monday, Tuesday side, right? So we got a lovely short, fantastic, wonderful. And let's put on to our 4 hourly, and 4 hourly is now giving us a big bullish candle. And before this bullish candle was even in creation, obviously we had this trend line out, and we were thinking, lovely, this is quite good. No, this isn't too bad. And we had that happening, and that was the close above the trend line that we obviously were anticipating, what we were looking for, what we wanted. That was the close above, and you were like, okay, good, now we're bullish. Now, you know, because we were kind of like in a flag pattern over here on the 4 hourly. So 4 hourly was telling us, let's go. And all we have to do now is up to our hourly. Is hourly telling us the same thing? 100% it is. Hourly is telling us, you know what, it's also time. We also want to go. Let's move. Now the question is, where are we going to find our entry? Where have our trend line broken on the 4 hourly? The same trend line broken on the hourly. Where are we going to find the entry? And this is a major problem that comes with many traders. They are always right on the direction, but they are incorrect on the entry. And as a result, they get stopped out, and then they start looking for different trading methodologies, different trading strategies, and it all goes to hell and gone because it's just your entry that's incorrect. So yes, you will never always be correct. There is never a trader that has always been on 100% correct on his entry. As far as I know, maybe if there is, I'd love to meet the gentleman or the lady. But until then, I haven't met one. So I'm going to continue with the way I trade. And so I pulled up my Fibonacci. And I saw over here, our 50% region is lining up quite nicely over here. So I was like, cool. You know what? Let's have a long opportunity over here. Yes, the trend line might not look as clean as what we would love it to look, but that's a decent fib entry. And I was happy with it. I was happy with my 50 pip risk. and my 100 pip gain, I was fairly happy. And that was what I was obviously looking at coming close as you're coming into this entry over here on 50% on the fib. So there we are. We're a bit choppy over here, indecision. That's not a problem. That's fine, actually. And you're pulling through into Thursday now. Our trades, we do tend to hold them depending on how much they are. We do tend to hold the positions for around, let's say, a day, less than a day, couple of hours, depending if you're scalping. And we're chilling over here, backing drawdown, not a problem. Sure, it's normal. Now we are jumping. As you saw, you entered this position here on Thursday, 3 a.m. If it wasn't at 3 a.m., it was at least at 7:30 a.m. This is my time, South African time. And we're jumping quite nicely over here. This is now Thursday the evening, I mean, this is like 7 a.m., 9 a.m., almost over 10 hours, so yeah, we definitely almost clapped our take profit. Like, oh my days, that was so close. Wow. I probably would have closed here. I think I would have closed. Like even the year, I would have been like, I'm sure. 1.8 risk is sure. If that was what your entry was, and you were perhaps looking at, maybe we can catch a nice opportunity, a continuation part. Because obviously we're at the 4-hourly level. We waited quite some time for this. We know we're gonna jump quite decently. What I did do over here was I did pull out the fib. And once again, I saw the 50% level. I thought to myself, maybe we can catch another entry. I wouldn't have done this. It's a bit too much risk involved. I would have just had my trade over here, stop loss, break even. I'm now risk free. So that's definitely what I would have done. And you smack that 50% level and we just jump. Take profit smashed. If you enter in again there, take profit smashed once again. So that would have been beautiful, honestly. And that was the breakdown that I wanted to show you guys. Quite clean, quite simple. All you needed was 4-hourly, key level, frame your picture so you know where you're playing in between. And you obviously had your intraday trend change pattern, your trend line, lovely, perfect. And yeah, your entry was obviously a Fibonacci, and it was quite clean, quite simple. And I'm definitely going to be making more breakdowns on different other pairs to show you that this works over a multitude of assets. And I know you're going to love it. And yes, please support the course. You're going to learn so much. And yes, I hope you have a wonderful day further. Keep well, keep safe. Catch you in the next one. Cheers. Good day, guys, and welcome to today's video. Today, I'm going to be breaking down GBP USD and how we could have caught this beautiful move to the upside. I'm sure you're going to love it, so let's get right into it. As per normal, we're going